Alright guys, hello and welcome to another special video on the stock market. In this video, I'm going to take a look at the chart of the S&P, and I'm going to explain the key levels I'm watching on the stock market and why it's important. Alright guys, join me. Alright guys, welcome back. As you probably guessed from my previous video, I am no longer in the UK. I'm currently in Tehran in Iran. I've come to a beautiful part of Tehran. Can actually join here my good friend Human of the Humzi YouTube
Hello,
channel.
everybody.
Okay, fantastic. Human's going to join me for this video on the stock market. And do you watch the stock market, Human, the US stock market, the S&P?
Yes, sure, 100%.
Now, of course, we already did a video on Bitcoin, so I want to talk about stock markets in this particular video. Now, of course, the stock market, the S&P, when it took out and went above the 5,000 psychological resistance level, it has remained strong and resilient and rallied further higher. As I'm making this video, we're just above the 5,100 level. Now, as you may remember, I remained bullish on the stock market after we took out that major resistance at the 4,600 level, which happened about November, December of last year. However, I have to be honest with you, the kind of movement that the S&P, the stock market, has made with hardly any sort of big pullbacks. I mean, all the pullbacks here have been very shallow. In other words, the stock market has been very stingy with its pullbacks, unlike the Persians, who are actually quite generous with most things. I don't know about pullbacks, but isn't that true, Human?
Yes, it's true.
But yes, guys, it is true. One of the most annoying things about this rally in the stock market, the S&P, has been the pullbacks have been very stingy. Even a 3% pullback, we've seen nothing like it. Now, of course, we're beginning to see some warning signs. For example, we're seeing divergences, negative divergences on the lower time frames. This typically precedes some kind of pullbacks, but not always. Another important warning sign was mentioned by Jason Geppert of Sentiment Trader. He mentioned recently in his newsletter that the levels of call buying by small traders, small speculators, as you guys know, small speculators are usually the dumb money. Now, these guys have become extremely bullish. Their levels of call buying call options, has gone way above what is normal, and this usually is a warning sign for the market. It comes right before pullbacks, when we see high levels of call buying by small speculators, small buyers. Just to explain to Human here, Human, as you probably know, small speculators, these are not the large professional traders, okay? So when I say small speculators, as I'm sure you know, as I'm sure you guys know as well, we're not talking about professionals, we're not talking about institutions, we're talking about the small guys, we're talking about small traders, people with very small positions. So in other words, these guys are becoming extremely over bullish, and this is usually a warning sign. Now, it does not mean that price has to make a reversal immediately. Sometimes it may take some weeks before finally we see some kind of a pullback or turning point in the market. In fact, Jason Geppert mentioned that there has been only one occasion in the last 25 years when the market has ignored this signal from the small speculators, this warning signal, and that was during the rally of 2021. So it's possible that the stock market, the S&P, is repeating what happened back in 2021. We shall see. But in any case, it is something to be aware of, that the market is becoming extremely over bullish in sentiment, especially among small speculators. And the final thing I want to mention in this video is this key level on the chart. As you can see this line on my chart, there's the 50 simple moving average. The 50 simple moving average is an important support level on the chart. Some chartists say that 50 simple moving average is usually a dividing line, a threshold between bull and bear market. But I think a better way of understanding the 50 simple moving average on the chart is simply as an important support level. And as Human knows, we look at support levels because of
risk.
Risk, exactly. In other words, guys, keep an eye on that 50 simple moving average on the chart there. At the moment, as I'm making this video, is about 4950 approximately. It's in the 4950 to 5000 range on the S&P. And that means as long as it can stay above the 50 simple moving average, for now, bulls have control. Now, I think at some point in the next few weeks, I think it's quite likely in the next several weeks, we might see a pullback to that 50 simple moving average. Now, I know I said that in my previous video as well, back in early March. It hasn't happened yet. And so far, the stock market has defied all expectations of a seasonal pullback, some kind of a seasonal weakness in the month of March. Now, of course, March has not yet finished. As I'm making this video, we're in the middle of March approximately. So maybe we'll see something, some kind of pullback or weakness by the end of this month, by the end of the March month. So once we see some kind of reversion to the mean or pullback or correction, whatever you want to call it, the key support level to watch is the, what, Human?
50 SMA.
Well done, 50 SMA. So the key level to watch, as I mentioned, as I'm making this video, is about 4950 to about the 5000 range. The reason is that during uptrends, we typically see pullbacks on the chart towards the 50 simple moving average. In other words, it's quite normal, even during major strong rallies and uptrends like the one we're seeing here in the stock market, for at least some kind of a pullback to the 50 SMA. In fact, moving averages often act like magnets, drawing price back to them. And then price usually holds these levels and then bounces off. The key question, which we don't know the answer to yet, is will the stock market hold that 50 simple moving average and bounce from it? Or will it break below it and decline below it? That's something we don't know yet. My personal gut feeling is, I think it's just a gut feeling based on experience, that I think it's more likely for the stock market, if we get some kind of pullback in the next few weeks, I think it's much more likely for the stock market, the S&P, to hold that 50 simple moving average and bounce from it. Probably bounce from that level and again move towards all-time highs, new all-time highs. We shall see. But I think that's a key level to watch. Should we get some kind of pullback or indeed some kind of a reversion to the mean in the next few weeks? All right, guys, that's what I got here in this video. Hooman and I are going to go to some interesting parts of Tehran here in Iran, especially as people here are getting close to the Persian New Year as well. All right, guys, thank you very much indeed. And it's goodbye from me and from Hooman here.
Thank you very much. Happy Nowruz, guys.
All right. And by the way, guys, make sure you also watch the members video for more detailed analysis as well. Cheers, guys. Bye for now.